Hello, everybody. It's good to see y'all. It is that time of the day. It's 3 o'clock Central Standard Time here. The markets have closed in Chicago. And I want to talk to you about this event in which they call the October surprise. Now, many people have been hearing about this, and people emotionally decide to step in or step out of the market based off of this so-called surprise. And almost every month, the financial media releases stories about the historical trends of that particular month, October. In 2012, a CNN article went over how terrible the things are going to happen based off of what's going to happen in October. And so I wanted to do a show today to get y'all ready for what's getting ready to go across your face on your social media sites. All right, now it's not that easy. And many of the articles that you read and many of the vloggers and bloggers that you'll see, those articles are classic examples of the media or individuals or financial advisors giving investors data that actually makes them less knowledgeable about investing than before they took the time to even read the information. So today I want to take this time, just a few minutes, and talk to y'all about the October surprise. I'll be back in 60 seconds. Bass.
It's the show that will get you thinking, and where the topics are hot. Feel free to comment whether we agree or not, 'cause he's got something to say. Sirwalterj Jones. Sirwalterj Jones. He's got something to say. Sirwalterj Jones. Sirwalterj Jones Show.
Come on in. The water's fine. Hello, everybody. Sirwalterj, the Sirwalterj Jones Show. I'm he. It is the midday connection, baby. How y'all is? Come on in. The water's fine. Water's fine. This is a financial show we do every day around 3 o'clock Central Standard Time in our towns. It's 4 o'clock in the Eastern area, and we talk about investing, not just investing in the market, but we talk about long-term investment, finance, and balancing a checkbook. But we want you to retire real nicely. As it pertains to this October surprise, I've taken some notes here. I've done some search here and there and try to get y'all an understanding on the history of this October surprise. So I'll be reading from my notes. If you see my eyes go all over the place. But this is a concern for many who got their money into this thing. It's bad enough that we who are believers are afraid. We've been taught in our churches to fear money, although the church makes the raising through tithes and offerings. It is, billions of dollars are raised in our churches, yet how money is looked at and taught causes men and women to fear. So as it pertains to this October surprise, we have to go back to 1907, the bank panic, a financial panic threatened to engulf Wall Street, mostly owing to the threats of legislative actions because of the scare due to the trust of shrinking credit. Now, the panic started in October 1907, and then it went for about 6 weeks. But during this time, there were multiple banks runs was happening, and there was a heavy panic selling going on at the stock exchange. And when I was looking at the History Channel a few years ago, I stumbled across some of the titans of capitalism, and whom names that you know today, Rockefeller being one, Carnegie, Ford, and of course, J.P. Morgan. And J.P. Morgan, he led a consortium that did the work that the Federal Reserve Bank would have usually have done, but the Reserve Bank had not been invented yet, hadn't even started, hadn't even existed yet. So one man and his wealth was responsible for the bailout of the entire country. That's the way it was back then. Most of you who understand about a crash, you go back to 1929 during the stock market crash. It happened in October 24, which causes this October scare. It was a bloodletting on an unprecedented scale because so many people had money invested in the market. But then you got to go back to further forward, that is to Black Monday, in which most of us were alive then. Nothing says Monday like a financial meltdown and an unexpected stock market crash. This happened October 19, 1987, which historians now refer to Black Monday. Okay, automatic stop loss orders and financial contagion gave the market a thorough throttling as a domino effect echoed across the world. Now, oddly enough, September, not October, has more historical down markets. More importantly, the catalyst that set off both the 1929 crash and the 1907 panic happened when? September. And the reaction was delayed. So in 1907, the panic nearly occurred in March, actually, with the tension building over the fate of the trust companies. Okay, so most Americans associate Black Friday with the day after Thanksgiving holiday, a day when retailers offer huge discounts and consumers kick off their holiday shopping. But the original Black Friday was September 24, 1869. Jay Gould and other speculators tried to corner the gold market working with an insider at the Treasury. The price kept rising until the Treasury broke the corner by selling $4 million in government gold, dropping the price of gold $25 in a single day, sparking a catastrophe and running many speculators, okay? And that's where the Black Friday come from. So Black Wednesday occurred September 16, 1992 with George Soros, in whose a name you constantly hear through conservative media. George Soros. All right, he did a raid on the British pound. It'd be good for you to do a Google search on that because it affected those of you who are in the Forex market. My daughter is in the Forex community. So September 2001 and September 2008 needs to be put on the scale. The single day point decline in the Dow that occurred during September 2001 and 2008 were bigger than Black Monday in 1987. The former owing to the attacks of the World Trade Center. Okay, then later on, the subprime mortgage meltdown, which affected many of you today. So the 2008 plunge went far beyond the U.S. economy, trimmed off about $1.2 billion, $1 trillion actually, from the global economy, and that happened in one day. So October has historically heralded the end of more bear markets than the beginning. And the fact that it is viewed negatively may actually make it one of the better buying opportunities for contrarians. All right. Peter Lynch, among others, took this opportunity to load up on solid companies that he missed on the way up. When the market recovered, many of these stocks shot up to their previous valuation, and a select few went far beyond that. So those of you who are afraid, you're nervous about the October surprise, don't get caught up in the hype of the media and a lot of these YouTube videos that you see. I'm not a financial advisor, and many of them will tell you they're not financial advisors as well. And a lot of us are borrowing from each other as we borrow from the news, as the news borrow from others, okay? And you've got to look at history. October gets a bad rap in finance primarily because so many black days fall in that month. And this is a psychological effect rather than anything to blame on October. The majority of investors have lived through more bad Septembers than October. But the real point is that financial events don't cluster at any given point. So you're trying to beat the market. You're trying to figure out the market. And it's good. You must do an analysis of the market. Absolutely. Don't be silly. It's common sense to study it. But don't listen to a lot of the hype, because you'll get caught into the emotion of investing. And before you know it, you could be pulling your money out of a situation that may not happen. Or some people start jumping in there to buy into a situation that may not happen, okay? And so we really have to be careful. The worst events of the 2008 through 2009 financial meltdown happened in the spring with the collapse of Lehman Brothers. Remember them? Now, stocks tend to fall in November and December due to year-end rebalancing and tax optimizations, okay? And some financially damaging events haven't been given Black Day status simply because the media didn't choose to dust off the moniker at that time. Although it'd be nice to have financial panics and stock market crashes to restrict themselves to one particular month so that we know how to jump in or jump out, jump side to side, jump on, jump in, jump out, okay? October is no more prone to bad times than the other 11 months of the year. It's for those of you who are believers, you understand that even Jesus himself don't even know when he's coming, okay? Just be ready when he comes, all right? I want to take this time and let y'all know, for those of you who are fearful, you're going to start seeing all of these articles and all these YouTube videos and things on Facebook and Yahoo Finance, Bloomberg, MSNBC, CNBC, Fox Business, your brother Pookie, your uncle John Jethro, okay, all these things. No, all right. History is telling us a story, and we can, in this instance, follow history. That we don't know what's going to happen in October, but don't let that cause fear in you or put fear in you that you don't want to start till September, October, or what have you. There are a lot of things, right? So I just want to take that time out and let you know, don't fear. Do what we tell you to do. I'll guarantee you that you'll be glad that you did. Markets go up, markets go down. They crash, they recover. There's a bear, all right, there's a bull. All these terms here, don't let it cause fear in you. Just get in, get involved. Like Nike, just do it and at least play around with it. Look at the furniture, kick the tires around, and eventually you're going to say, oh, I like what you did with the place, okay? That's my time. That's all I got for you. Tomorrow, 3 o'clock Central Standard Time, we're going to go further into this, all right? I appreciate y'all. Take care of yourselves and one another. We'll see you tomorrow. Peace.